Hi, everyone, and welcome to Stock Market Today. You have Alyssa Corum and Ed Carson here. We're going to break down the action for the major indexes. It was a pretty ugly day on Wall Street, Ed.
Yeah, it really was. And Ian, some of the leading indexes and stocks and sectors were even worse. Going to take a look at Westlake Chemical, mining and metals ETF, and also Ubiquiti, one stock that did relatively well today.
Okay, we'll check in on that one. First, let's take a look at the major indexes. Here's a look at the NASDAQ. We're going to run through a bunch of index charts here, but the NASDAQ first taking a pretty big hit today, down 1.1% for the day. The S&P 500 down about 0.75%. The Dow down 0.9%. And the hardest hit today, Ed, was the Russell 2000. So small caps having a really tough time. What do you make of what happened today?
Yeah, I mean, it was just there was coronavirus fears resurfaced. So we saw energy prices, commodity prices tumbling. Further evidence like Zoom Video and Peloton, which have been tumbling, they actually rallied today, which tells you about the mentality. NASDAQ back below its 21-day line. It really needs to get above the 21-day, the 50-day line, and maybe last week's highs before you can get really excited. And, it just hasn't happened yet. On the S&P, did close above its 21-day line, but just barely. I mean, that's a level that's worth watching. It's fallen a number of times. It's held support there. Maybe it will, but sometimes you hold support and then you don't. And so we'll have to see. Dow held up reasonably well, but as you say, the small caps, the Dow is still doing okay, but that's, the small caps, that is the first close for the Russell 2000 since October 30th, I believe. So
below that 50-day.
Below that 50-day, and it actually closed below it. So it's just, there's a lot of energy stocks in there. There's financials. I mean, the treasury yields fell today. It didn't do anything for the NASDAQ, but just that concern, if economic reopening plays, all of that came off, but nothing really came on either. It wasn't like something else. It wasn't like a lot of those growth names really came on either.
Well, with this big move off the bottom that we saw for the Russell, the Dow looking really strong, we were saying that this was looking like it was a bifurcated market. So what does it signal to you, the fact that we're seeing this deterioration now for small caps and tests of support, it looks like for the S&P as well?
Yeah, it's not great. I mean, look, if you really think about it, if going sideways would not be the worst thing in the world for a while, because there's not a lot of great bases. A lot of those cyclicals and reopening plays had already broken out, or some of them were extended. It's disappointing for the recent breakouts because most of them are struggling, but it wouldn't be the worst thing if we went sideways for a while. Now the market's going to do what it's going to do, but because there's a lot of stocks on the cyclical side and the growth stocks that could use some time. But when you're in it, this is the worst kind of market because you get in near the top. You get in near the top with the breakouts, and then the market rolls over, even if you go sideways over a period of weeks, because you end up buying right when it's flashing these buy signals, and then it says, I'm going to go back over. So it's just tough for investors. They shouldn't try to fight it too much. It's okay to be a little invested, have maybe some long-term winners, a couple pilot positions. But the bottom line is stocks aren't working very well right now for what, so, people need to take that into account.
Some great words of wisdom there on position sizing and portfolio management in these market conditions. And one example of a recent breakout that is now struggling would be Westlake Chemical in the basic chemicals industry group. Ticker there is WLK, down almost 7% today, sharply falling below the buy point as well as its 50-day moving average. So this one really struggled after what looked like a pretty decent breakout out of that cup with handle, but they don't all work, Ed.
They don't all work, and let's face it, the Dow, the S&P, all these things, they've been falling the last few days overall, and it's really hard for any stocks to beat that. In the case of Westlake WLK, several times it tested that 21-day line, tested the buy point. Until today, it didn't close below the 21-day. It looked okay, but this is an example of it's holding up. No, it's not holding up. Breaking through. It didn't technically hit the 7 to 8% sell rule, but it breaking through the 50-day line in higher volume, multiple days of higher volume. Leaderboard took this off late in the day today, just as an example. It just wasn't acting very well. Maybe this will set up again, but it's just this is not acting well like a lot of other stocks like it.
So with the sell signals today, like you said, didn't fall quite 7 to 8% technically from the buy point, but perhaps if it was 7 to 8% from your entry, and again, with it closing below the 50-day line, this may be a case where you may not want to wait till the end of the week. What do you think about that aspect
it's awfully
for your
close.
final sell?
Yeah, it's awfully close. Certainly, it's awfully close to a 7 to 8% loss, and for many people, it probably was, because if it was just a 1 or 2 percentage points above the buy point, it probably was at some point going through the 50-day line. I mean, the 7 to 8% should be sort of your maximum. You should be trying to. That should be the worst you get, barring some catastrophic, crash of a stock. So, there was a lot of reasons to probably just get out of it. Could you wait till the end of the week to sell your last shares? Sure. And maybe it'll bounce back, but it's just not acting well right now.
And now let's take a look at XME, which tracks the metal and mining group as an ETF, also taking a really hard hit today, down over 5%. Heavy volume here as well after a breakout. So yet another example of a group that we were talking about, this rotation into out of tech. Now it's taking a hit.
It is taking it. Obviously, a lot of these stocks had gone on long runs. I mean, we really started talking about the cyclicals because the growth stocks rolled over because they had been doing so well. But the cyclicals actually had a nice run. I mean, for a long time, they had run up. So, even on a weekly, they were way, way down. But pretty much as soon as the market bottomed, they were sort of off to the races. So they had gone up a lot. So from the perspective of this weekly chart, it doesn't look that bad. But if you bought any time recently, any of these stocks or this ETF, you've round tripped, probably taking a loss, in recent times. And so that's, when the commodity prices and the demand all of a sudden turns around, these things can move up and down like growth stocks. And right now they're losing like a growth stock.
Well, we've also been talking on IBD Live how maybe it's a better environment to be buying on the pullbacks rather than the breakouts. Is this a situation where if we see a nice bounce off of this level, it might be an opportunity to get in, or is it the way that it came down to the 50-day line a little bit concerning and make you not want to get in off of a rebound off of this level?
Yeah, it's coming down so hard, and coming down in heavy volume over several days. It just, a rebound, I mean, obviously it can work, but, a rebound that's sort of vertical down and then to come right back up, it just has it's less appealing that way. It'd be nice if it was gentle or more of a V-shaped, not a cliff face drop off.
All right. And last but not least, maybe a bright spot here, Ubiquiti in the telecom group ranked 19 out of the 197 industry groups that IBD tracks, ticker UI, forming a nice little handle here. Some really tight action as of late.
Yeah, and actually the only downside is that it would almost have been nice if this stock could have fallen a little bit more down to the 21-day line, maybe even more of a shakeout. Because if you own this recently, I mean, the whole point of a handle is you want to shake out some weak holders, and this handle hasn't really done that. But can't be too upset that a stock only fell 1% on a day like this. The earnings have picked up again. This provides rural broadband access, a lot of sort of distant areas. I think just one thing to be wary of. We've seen a lot of chip names sort of look like this, and then they nudge out into sort of buyable areas, and then they immediately turn around because that whole point. So if this one moves past, say, the 350 or whatever that buy point is, it may look attractive, and maybe this is the moment where it really works, but you should at least be cautious about things with this and other names because we've seen a bunch of times recently with the market sort of moving sideways and down, it's hard for any stocks to make headway. As you're saying, we're in a bifurcated market, and maybe we still are, but right now we're just in the very short run, we're all sort of sliding down in a gradual way. And that's just not a place to be making money.
That's right. And I was just trying to see how far it is above its 10-week line. So it's within 5% of the 10-week line. In theory, you could size your position off of that. But if you did want to take advantage of a potential breakout here, like you said, if it does clear 350, would you really want to wait for it to get down to the 50-day or 10-week before you sell, or would you want to have perhaps a tighter stop on something like this?
Yeah, maybe a tighter stop, and also maybe just take a smaller position. Maybe you take a small position here, and then maybe if it breaks past, the all-time high there, you fill it out and like really see, especially assuming the market is showing some more momentum as well. But yeah, I think on the sell side, yeah, you may want to size it off the 21-day, or at least not hold all your shares to the 10-week line in that situation.
Ed, thank you so much for your analysis today of those stocks and the market conditions, and a great reminder of maybe the choppy waters that are out there. It's not the time to be aggressively buying stocks in this kind of environment.
Yeah, I mean, the thing is that you might be able to make money, you might not, but there will be better times. I mean, whether or not, like, oh, I really fought hard and got 2%. Well, why not you could also just take a break and make 20, 30, 40% later on in the year. It's just, it's not just your capital, it's your psyche. You want to make sure that your psyche is ready. You don't want to be, using all your mental energy and then be sort of, shell shocked when it's time to actually get aggressive, when it's much easier to buy. So keep that in mind. Preserve your capital, keep your mind, sane too.
Yeah, that's right. The rules are a big part of it, but that psychology, incredibly key as well. Thanks for that, Ed. And thank you all for tuning in. The conversation is going to continue tomorrow morning on IBD Live. So make sure to check it out, investors.com/IBD Live. We'll see you there, and we'll see you right back here tomorrow after the close. Thanks for watching.